In the Forest Resource Analysis System software, we have built financial optimization into the fundamentals of our forest management operations, relying on two criteria mentioned earlier: selection of optimal harvest timing through multiple rotations, demonstrated in the FRASS econometric approach, and application of the real price appreciation forecast tool. Forest biometric solutions with growth and yield projections and log merchandising capabilities need to be matched with the econometric approach to benefit the timber producers to achieve a higher level of financial performance. In this video, we explore financial forecast portfolios created to apply to forestland parcels. This builds the analysis protocols from its foundation upwards to the financial optimization pinnacle. FRASS, using the RPA forecast tool, correlates log prices and logging costs with future log volume estimates. Scheduling harvest timing based on multiple rotations on each timber stand becomes a driving force of asset value optimization. This identifies the Achilles heel of traditional valuation methods. Those practitioners failed to consider timber harvest events through multiple rotations. The FRASS approach recognizes how that omission reveals substantial financial value for forest landowners. When we connect prices and costs with timber volumes and associated values, we allow the time factor to play out through a multiplicity of data forecast combinations projected into the future, looking for the optimal solution in terms of a synergy between biometrics and finance. FRASS cyclically combines data parameters on matched dates, in the process consistently discounting future revenues to present-day values. Financially optimal timber harvest timing is presented as a valuation nexus in the entire FRASS scenario. It allows all critical players involved in value articulation, a land appraiser, investment manager, and forest land manager, to attribute the same value to the asset, which is accomplished through shared access to the clusters of well-partitioned data configuration. The FRASS approach begins with merchandised sort and grade volumes projected into the future on each timber stand. Log sort prices and logging costs are interlaced annually for the first 10 years, and after that, in 5-year intervals for 250 years. The entire process is repeated for the next rotation and subsequent rotations on each timber stand for another 250 years each. Delivered log price forecasting is elusive due to unpredictability of log market behavior. The RPA forecast tool was designed in FRASS as a reserve price forecast. Expressed in real terms, it applies to growing timber assets, referencing their financial value every step of the way. It allows analyses of broad projected data fields extrapolated from these initial settings to develop optimal harvest timing combinations. It all begins by forecasting commodity prices into the future. The RPA forecast tool is applied individually for log sort and grade price and specific logging and trucking costs in explicit market areas. The process begins with a familiar price report commonly observed in the media. Some price reports are published by state agencies, some by consulting firms specializing in market reporting, and some are data records held by log buyers. These reports are all nominal prices, meaning they represent the prices paid at the time of publication. You will notice me using the term real prices quite often. This is to differentiate between nominal prices and those prices translated into a uniform inflation-free real price. In the FRASS platform, prices are all stated into today's real terms based on conversions using the U.S. Bureau of Labor Statistics Producer Price Index, the PPI. This is one graph report of the FRASS RPA forecast tool interface, showing Douglas-fir, SM and better, sort prices in real terms to put them on par with the value of the US dollar in July 2018. That sort's value in December 1993 placed in today's terms, is about $1,500 per thousand board feet. In 1993, the nominal price peaked around $875 in terms of the 1993 value of money, nominal terms. After 13 years, this log sort's value devalued by about 45%. Those are comparable prices across the real-time horizon. Another term I use describes the RPA forecast tool as a reserve price indicator. That is a term used when referencing stock price buy and sell decisions. It is applicable to the real price predictions as they show current market prices in reference to the forecast line. When the price is high, make 'em fly, meaning cut and sell using this indicator. When the price is low or below this prediction price, let 'em grow. That is one of the beauties of growing trees. They store well on the stump. This forecast tool can also be used between a log buyer and a log seller, a landowner, to set prices on a long-term buy and sell contract. Set the price for each species and sort based on this trend line, stated and updated in monthly real terms. This line in blue shows expected prices into the future and is updated each month as the new producer price index values are released. That makes these into real prices into the future. This works well for the single sort and grade combination, but when expanding it to all sorts of a species group, it becomes critical to consider projected price changes in unison with all grades from the same group. You may see 2-saw and 3-saw sort prices converge for a time, then moderate into the future. These screens fuse RPA forecasts with expected inflation rates. Now let's have a brief look at the RPA portfolios to be applied to parcels. Portfolios are automatically updated to current real terms each time they are accessed through the FRASS platform. Created, say, in 2010, a portfolio can be applied to parcels in 2020. We will look into one of the current profiles to see how it is built and what price forecasts entail. Clicking the RPA portfolio hyperlink opens the record. Species and sorts appear on the left side of the screen with hyperlinks to open charts of the sort prices in nominal and current real terms. These values always match the current date. This is when they are the same value. As the PPI value changes, so does the comparative value between them. The forecast tool uses a beginning date with the nominal price on that date restated in the real currency of today, and the turning point date and price also converted to today's terms. Dates are selected from the pull-down menu and will modify the value's real terms from that date. Automatically calculated real prices can be modified by a user. The real price appreciation rate and longevity values are automatically calculated and immediately displayed. Clicking the right side value chart hyperlink graphically shows real prices with the RPA forecast tool results. For the Western Red Alder 2-sawmill sort, a price stability period was disrupted early in 1993, sending it into an appreciation cycle that peaked in late 2003. An abrupt spike in 2007 was a market shock, which in real terms made a symmetrical climb and drop within 2 years. The price devaluation trend coincided with the beginning of the Great Recession in 2006 through 2009. Western Red Alder prices continue to adjust to the trend established in 1993 through 2003, reflecting a devaluation cycle expected to last through about 2045, despite the 2018 spike in prices. Our next step is Douglas-fir SM and better sort. Real prices are stated in July 2018 terms. The forecast parameters focus on a 2005 to 2009 price disruption event, with a nearly 17% per year slide in annual real prices. Clicking the view chart hyperlink displays the price devaluation and recovery path. The predicted trend follows a Markov Chain random walk, returning to base levels in current terms. Forecast prices anticipate stability between 2030 and 35, unless another major disruption event happens first. Each forecast is completed as a separately investigated event. However, results are considered in their entirety for comparative consistency within each species group. A portfolio sharing feature is activated by clicking the Share button on the same line with the model name. A window opens showing the names of authorized users, which includes only people in the FRASS subscription. Selecting boxes next to the names and clicking the Share button activates emails about the portfolio distributed to their accounts. Users need to log into the FRASS system to see the shared portfolio. No data are shared through the email. Authorized users only access the data in their FRASS account. An editor can change the portfolio's name, its settings, use it for parcel valuation, and share it with other users. Portfolio sharing is viewed as a powerful collaboration device contributing to ultimate forecast results. Each sort and grade receives its own RPA forecast parameters, but analysts will recognize that each species sort should be set in unison with others of that same sort. This keeps, for instance, 2 sawmill grade logs at a higher value than 3 sawmill grades, which is higher than the 4 sawmill grades, and all are higher than pulp logs in each sort. The RPA forecast tool follows the logic in the past price patterns for log sorts in a variety of disruptions and recovery trends, recognizing price cycle depth and duration to predict future price behavior. As we study RPA forecast tool predictions, we can see a market disruption that initiated in 1992 with a real price appreciation lasting until January 94. It took that appreciation pattern until 2004, 12 years later, to settle at price equilibrium where the real price returned to its initiation level of about $720 per thousand board feet. During 2005, prices in this market began to destabilize as market equilibrium slipped and prices fell to the lowest levels in 2009. This was the Great Recession that took down so many markets around the world. The RPA forecast tool prediction for this recovery period indicates the cycle trend of climbing prices through about 2030, where market price equilibrium will again be reached at about $730 per thousand. In the meantime, price shocks and random noise will be witnessed in these markets, such as the one shown here initiated in 2017 at about the same time as the US placed trade tariffs on Canadian lumber exported into the USA. It made a substantial price shock, shown as a symmetrical peak followed by a nearly identical price drop, on its way back to the predicted price prediction level. The 2005 to 09 disruption event, with longevity of nearly 4 years, reveals a return to real price-based level that will take about 13 years to return to 90% of real price-based level. This lengthy cycle is guided by the 14.22% RPA devaluation rate and the extended 4-year disruption phase. All market prices are witnessed within the 95% prediction interval, and 85% are witnessed within the 70% prediction interval. These statistics for this sort and grade are consistent with most other log category price prediction performances. The RPA forecast tool is an unbiased price predictor, providing market value insights for buyers and sellers, land appraisers and investors, and financial officers reporting asset value to shareholders. Highly elaborate econometric forecast models of commodity price patterns have organized vast arrays of potential independent variables into dozens or hundreds of simultaneous regression analysis algorithms to predict ultimate price effects on dependent commodity subjects. There is a danger of overcomplicating analysis rigor. The KISS principle is something I applied heavily to the RPA forecast tool, but here I use the acronym to represent Keep It Sophisticatedly Simple. I follow the law of parsimony as put to paper in 1300 by English Franciscan friar and theologian William of Ockham Razor to guide decision-makers to seek simpler theories to explain phenomena as being the preferable approach to more complex and convoluted explanations. Independent variable parsimony has been my guiding theme while I developed the real price appreciation forecast tool approach. The FRASS approach and the RPA forecast tool can be applied to your property to discover asset value now and into the future. The program's databases containing property data are aligned with market data and macroeconomic profiles. Utilizing complex algorithms, the program determines financially optimal timber stand rotation timings for the current timber stand and all stands into perpetuity. You will receive asset values discounted to current day for each timber stand, parcel, district, and the entire tenure. FRASS is responsive to your needs as it generates reports to user screens and in PDF documents. Site security and client data confidentiality are part of the system's design and implementation. Contact us at the email shown here to arrange a no-cost demonstration of the program and receive guest access to our demonstration site. Enter FRASS on your own to explore how it fits into your financial optimization profile.